The question we have to ask John is, what local markets work for real estate investing? We want to answer the big question, which is, why would someone want to live here? I don't think the word murder is the right word, but we have actually witnessed
a killing.
If you think wealth is about luxury cars, designer jewelry, or exotic vacations, you're in the wrong place. We're not concerned about your net worth, your 401k, or how much debt you have. Our approach is much different because real wealth isn't only about money. It's about freedom. Freedom to work because you want to, not because you have to. Freedom to pursue your purpose, live on passive income, and build a legacy. That freedom starts now. Welcome to the Real Wealth Formula with Brad Hovis, where each episode breaks down the principles, mindset, and practical steps to help you experience financial freedom today. Real talk, real numbers, real freedom. This is the Real Wealth Formula.
This episode is brought to you by Rebiz.com. You've probably seen the same old stuff in your feed. Invest in a franchise, start an ATM route, buy a car wash, launch a vending machine side hustle. Cool ideas, but here's what they don't tell you. The good ones are way too expensive, and the cheap ones barely cash flow. But there's a business model that's quietly producing big paydays as well as monthly income for people working from home, a coffee shop, or even out of their pickup truck. Visit Rebiz.com, that's REIBIZ.com, to see how it all works. Okay, moguls, welcome to the Real Wealth Formula. We have an awesome question today with an awesome guest, John Webb. He's worked with me for a long time, doing a bunch of deals with us. And the question we have to ask John is, what local markets work for real estate investing?
Well, it depends on what you're doing.
Yeah.
Right? I mean, there's all kinds of ways to make money in real estate. You could be fixing and flipping. You could be doing multifamily, commercial, whatever. You know, for what we do, we're focused on single-family homes. So for that strategy, I mean, there's really probably a handful of things that determine where we can play, right? Because again, we're looking for, you know, a 3-bedroom, 2-bath home, 1,500 square feet-ish, prefer brick from a maintenance perspective, carport or garage in a B or C neighborhood. You know, so we're not buying in the war zones, and we can't, quite frankly, we can't
buy in the A neighborhoods.
Can't buy in A neighborhoods. It's too expensive.
It's just too expensive. With the price to rent ratio just doesn't work.
That's right. Yeah. So it's the price to rent ratio, and I made some notes here, so I'm going to refer to those. And then, so price to rent ratio, you have to have the price to rent ratio, but you also have to have inventory.
Yeah.
Right?
You have distressed inventory.
You have to have distressed inventory.
Yeah.
And at a price point where that price to rent ratio makes sense. So that quickly narrows all the cities in America down to, let's say, about 31 of them. You know, places like Memphis and St. Louis and Indianapolis and Cleveland and Detroit, those types of areas.
Yeah, that's where we're doing deals. And like, you know, we live in Denver, but we're doing deals in those other areas with our local, you know, our branch partners, our partners out there that boots on the ground or whatever. Because if we were trying to do, you know, the model that we're doing, you know, right now, and I'll let you explain it, wouldn't work here in Denver. Like, the price to rent ratio just doesn't work. You know, to buy an average rental property here in Denver is going to cost $500,000-$600,000, but you're only going to go get $2,000-$2,500 worth of rent out of it.
Right.
Where, you know, give us an example of some of the deals we're doing in Memphis from a price and a rent perspective.
Yeah. So I would say the last probably 8 or 9 deals we've done, typically all in at right around 175. It's worth 200. And it rents for, you know, $1,695.
Yeah.
So that 1% rule is, people hear about.
Getting pretty close to that 1% rule. Whereas in Denver, you're at a 0.5 or even 0.4% rule. And so it's like, that doesn't match the buy and hold strategy. So you got to match that market to your strategy. Right. Like if you're wanting to scrape and build, Denver's a great spot. We've done those deals in Sloan's Lake and, you know, all over Denver, Sloan's Lake, and up in Curtis Park and Berkeley and those kind of places here. That works just beautifully. But we're not trying to scrape and build. We're not trying to fix and flip. We're trying to buy and hold, right? That's what our investors are looking for.
Yep.
So markets like Memphis work. What else?
From a market perspective, you know, St. Louis we've done deals in St. Louis. That's proven to be a good market for us.
San Antonio, we've started to get into that. We used to do that back in 2016, 17-ish. Yeah. The prices are a little higher in San Antonio than they are in Memphis, right? What do you think would be averages there?
I think for our model, probably 2 to 230, kind of in that range, all in, yeah.
What would it rent for?
It rent for, about $2,000.
About $2,000. So getting close to 1% rule.
It's not quite 1%, but I think we can get close.
Getting close. So then when we go out to these markets, we're seeing multiple markets, right?
Yeah.
What do you see as similarities? What's completely different? Like we talked about the difference in the prices. What do you see as the same? What are similarities?
Well, I think the similarities are there's a hefty portion of the population that rents.
Yeah. That's a good point.
That's our audience.
Well, remember when we were doing a data analysis on Memphis, and we were looking at how many houses were sold to owner occupants versus how many were sold to non-owner occupants, namely investors.
Investors, yeah.
I want to say it was, 50-50?
Yeah.
Or even more skewed towards the investors.
Yeah. There were 7,000 homes last year that were sold to investors.
And like 3,500 of them, exactly right. Yeah. So when we're talking about these types of markets, that's kind of stuff we're looking for, right? Being able to rent them.
Yep.
Here's what I've noticed, and you tell me if you've noticed the same thing. In every market in America, whether it's a market that we can do deals in or not do deals in, there's a part of town that the affluent people live. There's a part of town that the very non-affluent people live. And then there's everybody else, right?
Yeah.
I mean, we've gone to St. Louis and we went up to get some Italian food.
Oh, yeah, on the hill. Yeah.
On the hill, yeah. I'll be in St. Louis in a couple weeks here. Went to Zia's. That was the name of the restaurant.
Great place. I
mean, describe going in there. What was Zia's like for you?
You walk in there and it looks like you're walking into a place that you're in Italy.
Yeah. Yeah.
It's got that vibe and the staff and the food. I mean, just the whole atmosphere. Looks like you're sitting in Florence.
Like they've made the pasta. There's somebody there that showed up in the morning. And so you go into like, this is great. And then you go into some parts of St. Louis that, you almost got to shoot your way in and cut your way out. Like it's rough, right?
North City, St. Louis is not for the faint of heart.
Yeah, North City, St. Louis. So like when we're looking at these markets, it's kind of a science, but it's also an art, right?
Yeah.
Like we do the data analysis, just like you explained. Price to rent ratio, distressed inventory, average sale, days on market, all that kind of stuff.
Yeah.
But you can't just make a decision on a market that way, can you?
No, you can't. You got to get your eyes on it. You can do all the prep you want, right? So that you think you're focusing on the places that would make sense based on our model. Mm-hmm. But at the end of the day, until you get in the car and you start driving them and really getting a feel for the neighborhoods, you don't really know.
When you're getting the feel for those neighborhoods, what are some key indicators that you're looking for? What are some things that just stand out to you to determine? We use the ABC model, A, B, C, D,
right.
F. Help me understand, and for our moguls listening out there, help me understand how the subjectivity comes in, what we're looking for to help with those gradings.
Well, I think there's a few things. One is if I'm driving a neighborhood, so I've done my data analysis, and I think, okay, I think this neighborhood is going to be a good fit for us. When I get there, I'm looking for all kinds of rundown cars and abandoned cars or flat tires or just the level of the cars, the level of upkeep in the neighborhood in general, people taking care of their yards. Yeah. Is there trash everywhere?
Right.
Are there people at 1 o'clock in the afternoon? Are they, drinking beer on their front porch? Are there people wandering around instead of being at work?
Yeah, so those are indications of like D and even F type neighborhoods.
Yeah, depending. F's are pretty obvious, right? There's nothing. There's no commerce.
It's been ghettoed.
It's ghetto.
It's been abandoned.
There's empty lots, abandoned houses. It's pretty obvious.
There's no shops going on there.
Right.
There's a handful of things you can like. It's been abandoned. Yeah. That's how we define an F neighborhood.
Right. Now, and like, for example, Denver, it doesn't have an F neighborhood. And quite frankly, Wichita is one of the markets we went to.
Right.
That doesn't have an F neighborhood, in my opinion.
Right? I agree with you. I completely agree.
So, but going back to your question, which what do we look for, right? So that's looking at the yards and people and this and that, but then there's also the commerce around it, which you just alluded to. In our neighborhoods, BC neighborhood, you're going to have some brand names along with some mom and pops, but you're not going to have the boarded up strip mall. You're not going to have the old car wash that's
vandalized and tagged.
Tagged, and so you're not going to have that kind of stuff in the areas we want to be.
And so some of the indicators, we've kind of hacked it, and you made this observation, was the brand name commerce, kind of the chain type. If you go anywhere and you see a Starbucks, you know you're not in a D or F neighborhood.
Right.
You know that you're in now you could be in an A neighborhood, right? Because you're like, there's way more homeowners there. Mm-hmm. There's not very many tenants there. The price rent ratio is out of the world, even if you are in a town like Memphis. But some of those other indications are like commerce. So what kind of commerce are you looking for, just more specifically, in B neighborhoods and in C neighborhoods that you just don't see in D and F neighborhoods?
Well, I think you hit it. It's the Starbucks of the world. I mean, think about it. The Starbucks or a Target.
Yeah.
They spend a lot of money doing analysis on the population, the area, the demographics, all that stuff. Mm-hmm. Why not leverage what they've already done? They've spent millions on it. They're pros at it, right?
That's a great point.
So might as well leverage the work they've done.
And I do remember us going to San Antonio, and we did the data analysis, right? We said, here's how much distressed inventory is. Here's how much investor activity. Here's our buy box. Here's the days, here's all this data.
Right.
And then we mapped it all out.
Yep.
And then we actually go into the market, and some of the data, spot on. Yep, we knew we'd be wanting to buy here. But some of it was, no, it doesn't work. We can't buy here perspective, or we don't want to buy here perspective.
Right.
That's
why you got to put your eyes on it.
Yeah.
Right? And because a lot of the analysis that you're able to do, you do by zip code. Mm-hmm. That's about that most of the data mining you could do is typically by zip code. Well, what happens if you've got a zip code that's fairly large and there's all kinds of new builds in the south part of the zip code? It skews all the data.
Correct.
That's why you got to get down there and put your eyes on it and say, oh gosh, the north part of this is disaster. This is all new builds. That's not where we play.
Yeah. Which, from my perspective as a real estate investor, and I think we love going on these reconnaissance tours.
Yeah.
Right. Where we're pulling this data, we're going out there, we're going to go figure things out because we want to see more than just the houses. We want to answer the big question, which is, why would someone want to live here? Right.
That's it.
And sometimes it's not just, and correct me, it's not just why would someone want to live here? Why would someone have to live here? Right.
Yeah.
So making those distinctions, the want to can be everything from what? I mean, what are some reasons why someone would want to live in a given market?
In a given neighborhood or a given area of a market, schools in that community are great, and they have children. That's what they want to be. They want their kids to go to a good school. Mm-hmm. And quite frankly, a lot of it could be just that's what we can afford.
It's where we have to live.
Yes, we have to live. Yeah.
Some of the tours that we've gone on, San Antonio. What's been some of your favorite spots in or areas in San Antonio?
From a personal perspective, I mean, the downtown's cool. Right?
Yeah, the Riverwalk.
Yeah, I mean, it's cool. The Alamo. I mean, that's some great history, right?
Yeah,
I enjoy that. I think
the Quarry up north there.
Yeah, that's
cool.
That's
cool spot.
Yep.
Yeah, and being an outsider, making a decision about which markets to kind of get into, it's kind of neat to go to these markets and discover, like you mentioned, the Alamo. That was a really cool spot. I had no idea that Bowie from the Bowie knife. I want to say David Bowie, but that's not right. I can't remember his first name, John Bowie. And I didn't realize that Davy Crockett was in the Alamo when they went and massacred that place. And so Davy Crockett died at the Alamo.
Right.
What are some, San Antonio has these awesome spots. Where do you like in Memphis?
Well, I mean, Beale Street's fun.
Beale Street?
Live music. I mean, I love live music, so it's just a hoot. You get on there and go from one place to the other, and it's amazing how many talented musicians that nobody's heard of are around.
That are just these old dudes who've been ripping it on Beale Street forever.
Yep.
And you're like, they travel. So what I found out was when some of these traveling bands need various types of musicians, they call these guys that are on Beale Street and say, hey, can you shred the guitar on this? Can you do the bass on this? Can you? Yeah. When they're not doing those one-off things, they're sitting there just jamming on Beale Street. And you and I can sit there drinking Tennessee whiskey, or me drinking Tennessee whiskey, and sitting there just being like, wow, this is cool.
Yeah.
Right, Beale Street.
Awesome.
Food places. What do you like? Do you remember the names of them?
Well, I like Babalu, but the
Babalu,
one place I really like is right downtown. Oh, I can never remember the name.
Atomic Slims.
That's what it
That's
is.
it. Or do you like McEwen's?
And McEwen's is good too.
Yeah.
But that Atomic Slims redfish with the crawfish sauce.
Yeah.
Good night. It's good.
You know, Memphis, they talk about being known for barbecue.
Yeah.
I'm going to tell you, I think they've got that Soulfish Cafe with
place.
Catfish, dude. Like, unbelievable.
Yeah, it's unbelievable. It really is.
So then, you know, those are the fun parts of going to these markets. You go and you get to the restaurant, and you go to see the live music. And even when we went, we got to see John Morant playing with the Memphis Grizzlies and Wemby. Against the Spurs.
His rookie year,
Very cool.
It was wild.
Very cool. If you're an active real estate investor and you're not using FreedomSoft, I got bad news for you. You're getting beat. Beat by other active investors who've been utilizing this CRM software for well over a decade. We're able to close deals faster, more consistently, and with higher margins. So if you're tired of getting beat, go to realwealthformula.com/sponsors and click on the FreedomSoft link. Start doing more deals today. So then those are some of the positive parts.
Sure.
What are some of the negative parts? We've got several stories about just being in these markets. Sometimes a little funky, sometimes dangerous, you know.
Yeah, when you said dangerous, it spurred a memory.
Yeah.
We were in North City, St. Louis, and we were going to look at a house. You drive up, there's bullet holes in the brick and the windows. You go up to the door. You open the door, there's blood everywhere.
Yeah. Like literal real blood.
Real blood.
Looks like a scene from Dexter.
Yeah, it really did. And then, you know, the house is full of stuff, right? So we're meandering through the house, and like you go downstairs, and they obviously had some sort of prostitution ring in the basement.
Something.
All kinds of different curtains with booths.
Yeah.
I mean, it was.
Yeah.
I remember when I got out of there somehow, must have been on a doorknob or something, but I had touched something, and then I touched my face. I had lipstick all over my face. I was talking. I was like, yeah, that's old Trixie.
Old Trixie got you.
Old Trixie got me.
Well, yeah, I mean, we walk out of there, and I'm like, oh, yeah, this is the reason why we go and grade these markets, because we don't buy in those areas.
Right.
It's as simple as that. Like, people give us a hard time about, oh, you're doing deals in Memphis and St. Louis, and those are dangerous places or whatever. No, not all of Memphis is dangerous. Not all of St. Louis. In fact, it's more media hype than anything else.
That's right.
You know, what's a better headline to sell clicks and whatever? Safe place in Memphis, great for families, or, you know, another murder, right? Yeah. It's like, now, we have actually witnessed, I don't think the word murder is the right word, but we have actually witnessed
a killing.
Somebody dying by gunshot.
Yeah.
You want to tell that story? You want me to?
Why don't you fill in? I'll start.
Okay.
We were looking at one of our properties and just checking up on it.
That we had bought a long time ago when this was a safer area that has now since changed, and we have now out of that area. Disclaimer.
Yes, correct. And so we were wrapping it up, and all of a sudden I thought it was firecrackers.
Me too. Some kids lighting off firecrackers.
Yeah, exactly. So we looked down the street like, I don't know, 4 houses away.
Yeah,
probably. Here's this guy, a bunch of cops, and they shot him right in front of a school, right by a school window.
Right by a school window.
Elementary school window.
Yes. And the only reason why we weren't down the road longer is our deal manager there in Memphis, AJ. We had just got done looking at this house. We were getting it ready to sell, so we didn't have to deal with it anymore. It's cleaned. It's great. We're looking at the rehab. Okay, we're heading to the car, and I think you said, hey, did we lock that? And she goes, oh, yeah, I forgot.
Right.
Like, she's normally really on top of it, but that particular time, she forgot. Because had she locked it like normal and gotten into the car, we're driving literally right down the street, 4 houses down to where this police shooting is going on, right? So she goes back up, locks the door, and fireworks, pop, pop, pop. What's going on? You're getting behind the house or behind the car or something. Like,
you were running down the street with your phone.
I'm trying to get a video of it. One guy runs by with a cop chasing him. Another guy runs by with a cop drawn down on him. And boom, boom, boom. This man lost his life. Some house in 38127.
Yeah.
You know, in Fraser there in Memphis. And so you're like, yeah, there are areas to absolutely avoid.
Sure.
And it's the art and science of real estate. You know, one of the things that I like to mention here is you're from Michigan.
Correct.
How close to Detroit? Did you spend much time in Detroit?
Yeah, I spent a lot of time in Detroit.
Yeah.
I actually worked downtown Detroit when I started my career in consulting.
Back then, or even before then, it wasn't like it is now, right? With the bankrupt city and all that kind of stuff. At one point in time, Detroit was a thriving, it was the Motor City.
Yeah.
Like thriving, great place. Now you can buy houses in Detroit for $500. Of course, you got to pay up all the taxes and all that kind of stuff. But like Detroit didn't slide because when you were there, I don't know if it was when you were there, but definitely before then, it was a great city, right?
Yeah, it was great probably until the 60s.
Yeah. And so when you're looking at it, you're like, you've got all these sports franchises. You got the Tigers. Yeah. You've got the Red Wings. You've got the Lions.
The Pistons. Yeah.
The Pistons. You've got all four major sports teams in what is Detroit considered. You can buy houses for pretty cheap there. There's some parts of Detroit that you don't want to be in, right?
No, there's some parts you don't want to even drive in.
Don't even drive through, right? That didn't happen overnight.
No.
That takes time. Right. And so part of the reason why, comfortable telling the story about these houses that have issues, when you're paying attention to these markets, you get to see the shift. It doesn't happen overnight.
Right.
We called Fraser being what it was years ago and have been slowly exiting out of it when it makes sense. And so now we're pretty much, I think we only got a handful left in Fraser, maybe not even any. I don't know if we have any.
We have one that we're getting ready to exit. They just moved out.
We're going to exit that. Yeah. So it's like when we're talking about what we're looking for in a real estate market, the art and the science, yes, we want to keep the data going. We want to see the prices, the price to rent ratio. Is it appreciating? Are there signs of commerce? It's a smart thing to go and subscribe to the business journal for that city. Like we've got a friend of ours, Rob, who is all about that stuff, right? He used to go and show us all these places in Memphis or St. Louis or wherever we were at. Oh yeah, they've got a planned development for this. They got a planned development for that. Do you remember that?
Yeah.
So it's like, okay, that takes some data. But what more than that, it takes getting boots on the ground, going into the gas stations. Do you remember the gas station we went after the Trixie incident? Well, go ahead and tell that.
So we were like, we gotta stop and get something to drink, right? And we need some water.
Hand sanitizer.
Hand sanitizer. I needed hand sanitizer bad.
Yeah.
You walk in this gas station, it's completely covered in glass.
Yeah.
Like bulletproof glass.
Everything.
There's nothing out for you to grab to take to the counter. You have to go to the counter and say, I want a bag of chips and a water. And the guy goes behind the bulletproof glass and gets it.
Yeah.
They had a fried chicken stand behind bulletproof glass. It's crazy.
You're in a rough part of town where the fried chicken is behind bulletproof glass. You're in a rough part of town.
For sure.
And we're standing in line, and these women come behind us, and we're like having this conversation, and we asked, what do you call this part of town? And they go, well, this is Baden. This is Baden. Because this is the bad end.
That's exactly what they said.
It's like, yeah, what gave that away? The bulletproof glass behind the every single thing. And the good news is the hand sanitizer, the guy got you in good shape. You got to wash Trixie off of your forehead.
That Trixie, I remember fondly.
Yeah. So that's what we're looking for. It is ultimately answering one question, which is why would someone want or need to live here? And for our strategy, we want to buy in places that people want to live in because ultimately we're trying to help tenants buy those houses.
Right.
And people are not going to want to buy in the hood long term. Now, we have friends of ours who they're only buying D&F neighborhoods. Yeah. So can you make money doing those deals?
You bet.
Yeah, absolutely.
You bet.
You can make money a whole bunch of different ways in real estate in multiple markets across the country. It doesn't have to be in the select ones that were. In fact, some people would completely disagree. Why would you want to buy in Memphis? Right? It's like, well, we've pulled millions and millions of dollars, tens of millions of dollars out of Memphis, Tennessee. So, and we'll continue to do so. That's what the local markets, that's how we're thinking about them. That's how we're approaching them. Anything else you want to say about the markets and whatnot?
I guess a couple other things. Like if you look at a market like Memphis or you look at a market like Wichita, they got jobs. And quite frankly, a lot of it's blue collar type jobs. Mm-hmm. To use an old term. For example, Memphis got FedEx and Nike and Amazon have a huge presence there and St. Jude's. And, so they've got good jobs and they have ample number of them. Like Wichita, it's still like the airline capital of the U.S., they say. So it's got a bunch of airline. So I think the jobs growth, job diversity, that all plays a role too. right?
Somebody's got to pay you.
Somebody's got to, yeah.
And they can't pay you without a job.
Right.
And so whether that's that they're buying that house, they got to have a job to buy the house if you're doing fix and flips or scraping bills or anything like that. They got to have a job to be able to pay you rent. And so it's a really big factor. In fact, there's one part of Memphis, it's called North Haven. We used to love it because it didn't have city tax. It was just county tax. They were these perfect 3-bed, 2-bath, 1,500 square foot brick ranches. We loved it. Problem is, it's kind of far away from jobs. Though we thought it had tons of potential and bought a bunch in there, we eventually had to exit that part of the city, that part of the town, because it was just not producing the type of tenants that we were hoping for. You know, you wound up getting somebody in there and then them leaving in 3 or 4 months or 6 months or whatever. You know, the way to lose money in real estate is to have vacancy.
Yeah.
So, well, one of the traditions that we have is, you see those baseballs right there? I don't know if you can reach over and grab one of them, but we're going to have you sign a baseball. Yeah, it's a little funky. You know, bring it down. Yeah, there you go. I think there's one and there's a pin right back there. Would you mind, you know, for a baseball guy, when you're having a pro, someone you admire, would you sign my baseball, Mr. John?
I will definitely do that. This would be a first.
A first, signing a baseball. Well, yeah, we have all of our guests do that, and we throw them in there. Hopefully we'll have a whole bunch more. But, man, I really appreciate you coming out and answering the question, you know, what local markets work for real estate investing. Give us a holistic view on what we're doing and what can be done in other markets, how to merge the art and science of, you know, picking a market. And so for everyone else, thanks for sticking with us. I will see you on the next episode.
Thanks for tuning in to The Real Wealth Formula, hosted by Brad Hovis. If this episode helped you see money and purpose a little differently, make sure to subscribe and turn on notifications so you never miss an episode. Share with someone who's ready to build real wealth, and keep building the life, purpose, and freedom you were made for. Until next time, keep your goals clear and your wealth real.